Hey guys, Mike here again. And ASOS has just come out with their earnings, so I thought I'd do a quick update on them. I guess the bottom line here is it was not a good quarter, but this is mostly expected. Now, if we go into the numbers here, the overall growth rate was about 4% on a constant currency basis, and that was mostly dragged down by the rest of the world segment, which dropped by 10%. So that was a big drag on their growth for the period. They're saying that Russia is about 4% of their total sales, and those went to zero at some point during the quarter. I think maybe a month ago. So it wouldn't have been a 4% effect, but it did have an effect. In their main markets, they actually did fine. The UK was about 8%, US was 11%, and the EU was flat in terms of growth. So that's not actually too bad, because they had expected a difficult half because of the very strong half they had during COVID, and so this is a bit of the hangover year, as I've said in the previous video. So rest of world, I think that the biggest problems obviously are supply chains, and I actually got my wife to do a test. I'm in Canada, so I got her to order something. So she ordered something, said the prices were good and the selection was good, but the delivery times were quite long, and I think that discouraged her from ordering again. So I think maybe this is what's happened in Australia, which is one of their bigger markets. And the big issue seems to be that there's no fulfillment centers in any countries outside the US, EU, and the UK. On the upside, though, these are not primary markets for them, and so the big thing I was looking at here was the US growth, which actually came in quite strong at 11%. If they're going to hit their 7 billion revenue target over the next few years, they're really going to need that US to do well. So I'm quite encouraged by the numbers coming out of the US. So that's really great. They also didn't change their guidance aside from removing the Russia impact. So if we look at how they did here, they had about 15 million in pre-tax adjusted profit. And so their target was, I believe it's 110 to 140 million for the year. So that would mean that they're expecting the second half to be quite strong, or quite a lot stronger than half one. So if they are actually able to hit these targets, I think that the momentum is going to possibly shift in the other direction, because it's going to look like a pretty good acceleration here. So they did put a caveat. They said it's fairly unknown, and there's some risk right now just based on all the unknowns going on in the world. So they may not hit those targets, but they didn't actually pull the guidance. So that's positive news. And if I just reverse engineer this, if we take out they said there's about 14 million in growth they were expecting from, profit they were expecting from the Russian side. So if we take that out and take out the first half numbers, the second half looks like it'll be, should be between 80 and 110 million pre-tax. And again, that would look pretty good compared to the first half that we're in right now. One thing that I did notice here that I think is quite positive actually is their Premier offering, which is their version of like Amazon Prime. So you pay, I think it's £10 per year, and you get, I believe that's the number, £10 per year, and you get free deliveries and next day delivery on certain stuff. And so the way they explain this in their presentations in the past, they say the people on the Premier offering actually order a heck of a lot more, and the basket size is actually bigger too. So I'm thinking that these growth rates in the Premier offering are possibly a leading indicator to growth. A lot of these people have signed up, and you would expect that the sales would follow after that. So in the UK, they were up 23%, 13% in Europe, 58% in the US, so that's really encouraging. And then 45% for the rest of the world, even despite these supply chain problems. So that's pretty positive. What else have I got here? We got one more positive thing, which is they opened their 4th fulfillment center. which they need in order to hit their growth targets. But it's good that they got that open. And yeah, I think on the negative side, most of the problems here were expected. I don't see any real big surprises here. They were expecting, they had been saying it for months now, they expect a hard half year due to difficult comps from the COVID year. So that's the COVID hangover, from Russia closing, and also the supply chain and inflation stuff that we all know about. So I think that's good that there's no surprises, and all of these problems, I believe, are temporary. So that's the kind of problems I like, the temporary problems that squash the price of a stock, and then once the problems get removed, the stock can reverse in the other direction. What else is there? Oh yeah, I guess this is a negative, but also expected, that their customer growth was only 7% versus last year. But I'm not sure, they didn't really mention whether that includes removal of the Russian customers. So if it does, then the actual growth rate would be quite a bit higher in the markets they're in. So I'm not really sure, but 7% is not fantastic. But again, that's COVID hangover year, and we should see that tick up. So I'm going to keep an eye on that. So if that doesn't start ticking up in the next year and a half, it may be a red flag. So I'm going to keep an eye on that one. So yeah, no other negative news that was surprising. They did talk about inflation, and they said that they were high, as we all expected them to be in every part of our lives. But and they also said that they had improved some of their efficiencies to offset a lot of that in the first half. And going into the second half, they say that they're going to increase prices by low to mid single digits percentage. And the tone of the earnings report sounded like they weren't worried about it very much. So I guess that's positive as well. So bottom line for me here is my thinking hasn't changed on this company. This is a very expected bad quarter. We knew this was going to happen. This is why the stock is down, because everybody's expecting this. And so I'm still sitting on my 3% position, and I'm hoping that the stock will drop more. Hopefully there's some negative people who took this news really negatively, and it'll get into my buy range below £12. Between 10 and 12 would be fantastic. I'd look at adding a full position up to 10% of my portfolio. But the thesis remains the same. Buy when the news and margins are temporarily depressed and when there's negativity around the company, and then you sell when everything is looking good and everybody is really positive on the future. And it's possible, I still haven't got to there yet, but it's possible this is a long-term hold and forget about it stock. I'm not quite there yet, but if I can start to see that, okay, this is a permanent fixture in the world, this is a really strong brand, they have a moat, then if I get there on my understanding of the company, then I may just hold this for forever. Yeah, other than that, I just wore my nice top shop shirt, which is what an ASOS brand. Just wore that for this video, and thought I'd not look like a schlep for once during the video. But yeah, if you got any comments, leave them in the comment section, and I'll see you in the next video. Thanks.